I'm Keith McCullough, and welcome back to the Investing Summit. I had a little lunch, and on to the next play we go. First we did, and I'm not trying to find people that agree with me. Like, let's be clear. I mean, you know what I'm positioned bullishly in, and I just had a very good conversation, I thought, with David Rosenberg. What I want to know from people is something I can learn, right? I don't want to know what my next position could, should, or would be. I want to learn more about the positions that I have or may not have, and dig into topics in this case where I think my friend Luigi would say that I'm kind of like a neophyte, so I need like somebody who's been around Hedgeye. I'm not that hard, I'm not that hard for him to accept. I mean, he's not going to run me over because I don't know everything about DeFi. So thank you, and thank you. No. And this is our first time being on a live wire, so welcome.
Yeah, no, thank you, Keith. This is it's full circle. You know, I've been a Hedgeye subscriber for a very long time. I think over a decade at this point. And you know, really excited to work with you. When you first announced digital assets coverage, that was like a really exciting moment for me because I know you weren't super excited about the space early on. So it's good to.
I think it's because we were in Quad 4, which we'll get into. I mean, the space does not like Quad 4 either, so there's at least some similarity there. But you know, over time, as it became more institutionalized now, and you know, for me, I need a time series. I need price, volume, and volatility data to analyze anything that ticks from Avalanche to Solana to any coin we could be looking at, or Bitcoin itself. First, though, I wanted to you know, just take a step into like what is a day in the life here as you're the chief strategy officer, right?
That's right.
At one of the bigger ones. I mean, I think you got, first of all, you have a ton of followers. That are, I wish I had all your followers, but I mean, you have a huge community, and I wonder what that's like, a day in the life of Luigi.
That's a great question. You know, my background is traditional finance, so I worked at Citi for about 7 years or so on different trading desks, but found Bitcoin and crypto in basically 2010.
Yeah.
Yeah, started trading it while on the desk at Citi. Was pretty excited by it. And you know, since then, I've been involved in the crypto and blockchain ecosystem ever since. I joined Ava Labs, which is the company that launched and built the Avalanche blockchain in 2021. So it's coming up on 5 years now. And you know, what's a day like? It's fascinating. You know, we are building not only technology. And not only you know, an ecosystem and a community, as you suggested, but we're also working on enterprise type deals and business deals as well. So the role really spans the gamut of trying to think deeply about one, how do we integrate this blockchain technology, you know, across all the enterprises in Web 2, and how do we also you know, enable new viral applications to build on our blockchain in particular, right? So the role really spans the gamut of like a bunch of different areas, whether that be business development, you know, more strategic thoughts about how to position the blockchain versus your competition, and then also you know, really working with developers and technologists on you know, what the chain needs to integrate going forward as well.
Is there too much to do? I mean, when it gets explained to me, like whether it's Ish or Christian Drake, you know, my teammates that know,
Yep.
you know, they know a dangerous amount about the subject matter. And my neophyte conclusion is, if you're trying to create in parallel what exists to most people in the physical world, or to most human beings they'd recognize, and you're trying to create it in this world, you know, that's a shitload of stuff to do, man. Like, you must be pretty, like, is focus a hard thing to have? How do you find focus? Does it go where the flows are going, like how markets would? Like, how do you think about that?
That's probably one of the better questions I've ever gotten because you're exactly right that we could go in every direction, and a lot of times crypto moves on narratives. You know, you need to kind of you need to really you need to really be ahead of the game, whether it's prediction markets or perpetuals and all these different things that people are doing. You're always trying to find a way to like kind of be ahead of the curve on those things, and you can't really ignore them as much as you'd like to say you would. You know, but I would say like over the past 3 years the space has matured a ton. right? Like 3 years ago, we did not have, BlackRock issuing securities on chain. We did not have, PlayStation and Xbox games that had blockchain in the background and nobody even knew. We didn't have these kind of things. So the space has really grown up, and I think it's because, the first, probably the most interesting product in crypto, i.e., the stablecoin, has really gotten well adopted and is really starting to change not only the crypto world but also legacy businesses without consumers and retail even knowing. And with the recent passing of the Genius Act in Congress, that's only just begun, right? I mean, stablecoins will continue to grow, much larger going forward, and I think the administration views it as a strategic sort of way of getting the dollar dominance around the world, and we'll see kind of how that happens. But that has been the first, I think, product, so to speak, killer app, so to speak, that blockchains can finally hang their head on. So yeah.
Yeah, it's like you focus on where mature human beings are going to go first. It's just you being on this. I mean, first of all, to have somebody who is properly, I shouldn't say properly, wrong word, somebody who is formally trained at, on the old wall, Citigroup, et cetera. My formal training wasn't in crypto. I mean, you have an adult. We know where you live. Where we know we can find you. You're not Sam Bankman-Fried, right? There are a lot of reasons why I didn't like crypto, including that very big one. This is, to me, like the difference is that you have adults building businesses with institutional adults giving you institutional big boy capital. And again, where I assume you could screw it up or do really well is in where you focus. So is that a fair way to characterize it?
Totally. I mean, we could focus on, regulatory arbitrage and, trying to do things in a way that isn't compliant or, random jurisdictions, et cetera, like many people have in crypto, right? Crypto itself is not a bad thing, but it can be used in many ways, and many different bad actors come in and leverage it in a way that isn't, is unfortunate, like SBF, like FTX, like many others, frankly, throughout the years. But I think whenever you have a new emerging technology, it's not uncommon that you'll see a bunch of fraud, that you'll see a bunch of people trying to do things, fast money. Like I think about the late 90s, with the internet and the tech bubble there was a ton of fraud there. And crypto only makes that easier,
Yeah.
right? Because you have frictionless money, and for lack of a better word, like people hide themselves, right? Like there's no KYC, and all that stuff is really improving. Like the authorities and the technology in terms of tracing people on chain has gotten to a level that is really impressive in terms of tracking people. So blockchains are actually quite transparent,
Yeah. Well,
much more transparent than cash.
that is progress. I mean, what hasn't changed? There's still frauds on Wall Street, and in crypto, and everywhere else for that matter. It just so happens that this game's got a lot of leverage where people can make a lot of money really quickly by, not being moral stewards, like let's just say for your children.
That's right.
But like you look at a day, let's just go back to Friday. I mean, Friday. So you have your bad actors. You have your new institutional money. You have a lot of participation of retail investors that are not bad people and bad actors. But those people are got pushed in and get flushed out. Like that was, I think they call it getting wrecked, right? I mean, the amount of liquidation that happened on Friday in and around that pump comment was incredible. Like, I mean, that just puts it all together, right? There wouldn't be more and more frauds and cheaters if this kind of leverage and capital and money couldn't be made. I mean, there was an absurd amount of money by somebody front running. You saw within, was it 30 seconds before Pump came out with his comments?
Yeah.
Massive trades that triggered just a waterfall, and we're talking hundreds of millions of dollars in P&L.
Yeah, and that was conducted on one of the perps exchanges called Hyperliquid. which is, one of the more liquid exchanges, but not a centralized exchange, right? So there isn't mandated KYC, and so a lot of people trade on this, and it's quite unfortunate, right? Like at the end of the day, though,
A lot of people
you
trade on it because they don't have to be known, or because they can't get on the other exchanges because they need to be known there. Like, why would you go there?
yeah, it's a great question.
I didn't mean to interrupt. I'm just trying to make sure I don't
No,
forget.
no, it's a question the industry always asks. Like, is KYC something that should be mandated writ large? And for the most part, it is, right? You go to Coinbase, it's KYC. You go to
Yeah.
Robinhood, it's KYC. But Hyperliquid is not, and they are the
Coinbase
most
is like
liquid.
Fort Knox, man. It's like I have plenty of brokerage accounts, and the hardest one the hardest
Always,
one to go through all the
always.
bullshit is Coinbase.
Yeah. And like, there is the UX, right, of not doing the KYC and all that kind of stuff and just using the on-chain capital. It is much better, right? It's a better experience. But, with that, you do have people who, are largely using that exchange for probably, reasons like you just alluded to. And, I think there was 19 or 20 billion dollars in liquidations, the largest it was the
Crazy.
largest crypto liquidation, yeah, ever. And it was a random Friday at 5 o'clock, Eastern time after U.S. markets have closed. And while the Trump comment was, obviously moved markets, it shouldn't have equaled 80% drawdowns, for which most have subsequently recovered. Let's call it three quarters of the decline or something like that. And you basically just rinsed retail, and frankly, not only retail, a lot of funds. I think we're still assessing the damage, but a lot of funds got liquidated as well. Like I think if you had a 2x position on any altcoin, you had to have been liquidated just by the math. And it was so fast, right? It was within I think 30 minutes that there wasn't really a way to top up the account or to do a margin call. And this is one of the things that crypto needs to really get right with the regulators in terms of market structure, because you can't have a situation where there's this 30-minute decline and everybody gets rinsed.
That's crazy.
And yeah, it just doesn't inspire confidence, right? Um,
That would not
like
inspire confidence.
not inspiring confidence at all. And but it is challenging, right? And so right
Yep.
now there's the Clarity Act that's going through Congress. I think it was passed by the House, but still sitting with the Senate. And that's mainly to look through and go through market
Yep.
structure of crypto. And it's actually a challenging problem because you have a bunch of different exchanges. They're all global. And mandating, for example, something like a circuit breaker would actually be quite challenging to do. So it's going to be fascinating to see how regulators and also the market coalesce around how these markets should be structured as well.
Yeah, the like I was tweeting it this weekend, so this is not new to people that are in your world. It was very well known, and it should be known to everybody in America because the only reason, or everybody in the world that wants to have some rule of law and some operating procedure that at least if you want it to be everything that the stock market ever became, you should have some of these guardrails. I mean, it says, one tweet was the Hyperliquid X, which is accounts that you're talking about that you don't have to know your customer with. Those were
Yep.
actually open that day, Luigi, right? Allegedly, okay? The insider opened trades 30 minutes before the tariff announcement, closed the trades out for 192 million in profits.
In one day. It's insane, right? And that's sort of one of the things that the industry really has to get right. And this is for trading of crypto assets. So this is like AVAX, Sol, Bitcoin, these type of assets. In the crypto industry, there's also the blockchain and the technology. And that's where I get much more excited. I think crypto asset trading will mature over time. It's already much more mature. I know it seems like a low bar, but much more mature than it was even 4 years ago, right? It's much more liquid and all this kind of stuff. And I do think you will have regulators, as they are right now, kind of putting the hammer down on some of the stuff that makes it easier to sort of do nefarious things. But in addition to that, what you're also seeing is like tokenization becoming a major trend, and getting people excited about blockchain. So I think Larry Fink was making comments this morning from BlackRock that they're building a tokenization engine within BlackRock directly, and that means like, we'll be able to tokenize stocks, all these kind of things directly with somebody who's already embedded with, a bunch of the Wall Street players. And, there's a bunch of benefits to tokenizing assets and stable coins in terms of just operational efficiencies and also just moving money around faster.
Hmm.
And like one of the things I tell people all the time is like blockchain is really just the infrastructure for moving value, just like the internet was for information. And to the extent that we can tokenize and put financial assets on chain, we'll be able to move them in a way that's much more seamless, faster, cheaper, and you'll have much more transparent collateralization of these assets because it's all, frankly, like I said, transparent.
Well, anything that has to do with, like you said, like there's the question of blockchain as a technology, tokenization, and then there's this question of these wackadoo markets that have no regulation. I mean,
Yeah.
at some point, like this administration has to get off their, not very high horse right now, by the way, because they've not really protected the little guy. Like in the same day, I think over 1.6 million of these was actually 1.6 million accounts were liquidated, right? So
Yeah.
you're like, we're talking about like epic devastation out there. And do you have any sense for that? Like, we get that the entire administration owns Bitcoin and crypto. We get that they're pro crypto, but is there any sense on like some timing of regulating some things, right? This shouldn't just be free willy out here.
I totally agree. I think passing of the Genius Act definitely made stablecoins, regulated, and I think
Right.
we can talk about a bunch of the advantages of that, but that's less risky. The Clarity Act will address more of the issues with respect to the crypto market and crypto market structure. Over the past, let's call it, 4 years before Trump arrived, everything was a security, everything was illegal. You weren't able to do anything in this space, really. It was actually quite challenging of an environment to operate in, and that didn't really protect anybody either, right? Like FTX happened right under their nose, and with this administration and the Clarity Act is largely bipartisan. What I expect to see from that act is more rules around trading, more rules around disclosure,
Okay.
more rules around all that kind of stuff. And so we hope that gets passed this year, maybe early next year. But right now it is a little bit of a tussle between the Senate, Democrats and Republicans. So that would definitely make the crypto trading environment much more, let's call it institutionalized, versus what it is today.
Well, could this ultimately be the reason? Like I was talking about this on the call. You know what the call is, right?
Yeah. Yeah.
Our morning meeting. You can dial into it or tune into it online. It's called The Call. It's my morning research meeting. And anytime a trend signal breaks, like it's my most successful back-tested signal. You know this, but for people that don't know this, that are just watching this from a crypto perspective, it's an insurance policy. All right. When the thing breaks, whether it's Amazon or it's Avalanche in the case of Luigi, it's not like he doesn't know that on my signal it broke. When it broke, the dam breaks and it goes down faster. That's what happens. So then you start asking, a lot of people are asking themselves, why? Like one big answer on Amazon is pending regulation. One potential big answer, not for Avalanche, but for crypto in the aggregate when you consider this meltdown, just that. Like you guys are going to have to be adults. You can't do this shit anymore. And that's going to be a day of reckoning where maybe you'd come in and buy a bunch of crypto. Is that a pending negative catalyst for this sector?
Yeah, it's a good question. I don't think so. I think the reason for that is crypto, for the most part, hasn't really attracted large institutional flows outside of Bitcoin. Maybe to some extent Ethereum, but it really hasn't attracted any of that capital. And so, regulation, in my opinion, would actually make that capital much more interested in investing. So like one of the emerging trends this year has been digital asset treasury vehicles, DATs, I think they're called. And that is basically like a stock wrapper around a token. And all of that stock or that public equity does is own a bunch of the token on the balance sheet. And so that it provides access for people who can't or don't want to, put their money into crypto or Coinbase or any of these exchanges, but want to use their traditional broker exchanges, then they can invest in these vehicles. Or if your mandate is only to invest in equities, then you can use something like this. And so that sort of solves some of the access problems. But with respect to your question, like I don't think that regulation will hurt the industry writ large and tokens writ large. I think it will hurt certain parts of the industry for sure, who have largely benefited from like maybe you want to call it regulatory arbitrage or whatever you want. That's probably the nice way to say it. But they've benefited from the opaqueness, let's call it.
Yeah, big time.
Yeah,
Yeah, that's what I mean. The flush.
exactly.
If I ever went to Congress with a bill, which will never happen, I would call it the FPOS bill. So again, this is flagrant pieces of shit or flaming pieces of shit, whatever you want to call it.
Yeah.
Loaded with grift, loaded with fraud. You got to get that out so that it doesn't give everybody else a bad reputation. Because once you start to get above that fray, and you can tell me what you think the level is. I mean, I think $1 billion in market cap is probably a fair spot to start, but there's a pretty big delta between like Avalanche, for example, and Solana's cap, right? But what that is, Solana now has some institutional, like to your point, like buying. You have the treasury companies forming. There's some of that, but down below, I mean, this is not below deck. This is like in the freaking sewer. This stuff should be eradicated.
Yeah, I mean, it's like I said, I think I try to take a high level view that it's not dissimilar to what you saw in the 90s. Like, it's so much trash across the board on a lot of companies that didn't really have a lot of technology. They were vaporware, and they were actually going through the legal process, frankly, in terms of IPOing. And with tokens and blockchain and crypto, it's just like 100 times easier to do. And so that just makes you're going to have more. And, because of that, I think, one of the things in the Clarity Act in particular is how, it provides a little bit more information on how to launch a token and what is legal and not legal. Right now, all that stuff is kind of gray. And the amount of money the industry has spent on legal fees, not understanding what the legislation or what the rules are, is a challenge, and has been a challenge. So I think, like I said, when you have a highly emergent technology, especially you combine it with frictionless capitalism and capital markets, you're going to have a lot of like fraud, garbage, trash. But I think the key for people who are at least interested in digital assets is to take like a bird's eye view and say, all right, well, there's a lot of trash here, but there's also some really interesting stuff that's happening, and the technology is really interesting, and maybe I should use it for my traditional business. Maybe it can make my product better. Maybe it can make my business more efficient. I think that's where you're going to start to see, and we're starting to see it, right? Like PayPal has launched their own stablecoin. Stripe is launching their own blockchain and has largely used crypto as a way to sort of get around a lot of the regulations with banks, and compete directly with banks. And I think that's going to be an emergent trend going forward. How different companies use crypto or fintechs use crypto and stablecoins to compete with the onerous regulation on banks after Dodd-Frank. And there's like a lot of areas and pockets there. Like for, another one, like NASDAQ seeking SEC approval to actually launch tokenized equities in its exchange directly. They sent a letter to the SEC on this. So there are real things happening that are transforming a lot of real businesses that have very well capitalized and interesting companies. And blockchain is going to be a really exciting technology for them to use. And tokens, this is one of the most debated things in the industry is like, will anybody care about the tokens though? And that's a fantastic question, right? Like it really depends on value accrual. Like, there are apps in crypto that generate crazy amounts of revenue, and some blockchains generate crazy amounts of revenue And those are the types of things that are going to continue to persist, are going to, accrue value and be basically commodities. Like I think that's what
Yeah.
most of these tokens are. And you know better than anybody that commodities are very susceptible to boom bust type cycles and supply demand type dislocations. So I don't think crypto tokens will be much different.
Yeah, the main reason why I asked that question, I mean, we're trying to build a digital asset business, right?
Yeah.
So we are interested in the longer term winners story. If you can separate the flaming POS from the winners, you're going to win
Yeah.
big time. That's the story so far. I mean, and
That's
we're not
exactly
that
right.
far into it in terms of time and space relative to human history, that's for sure, or markets for that matter. But when I look at it, like, so for an in-house example, you'll appreciate this because you know how our workflow looks to a degree. But so an analyst on our team will ping me and say, hey, Keith, how does XRP look versus Tron? And what they're really doing is saying, can you give me the signals on those two things, right?
Yeah.
And when I got asked about Tron, like I just took my kids to like Disney on the Tron ride. It was really fun. I've seen the movie. I was like, what? Like, are we really like? Is this why? And the quick response was, have you looked at its market cap? I mean, and as soon as I looked at the cap, I'm like, okay, there's my confirmation bias. It's like a big thing. It's got like 30 billion in market cap.
Huge.
So that's something we want to analyze. Because if there's fraud in something with, I'm not saying Tron has fraud. I think we on the margin like Tron. But if we find another Bankman-Fried, we're probably going to find it in some of them that have a lot of cap. Because that's the thing about fraud, is that people believe it. So what is it like that separates, like when I look at my basic market cap screen and what my analysts could be working on? I mean,
Yeah.
I know you don't want to talk about the valuation of Avalanche, that's fine. But, like Tron, I think, is 3 times Avalanche, and then like something like Solana is 3 times that. Like,
Yeah.
how do people think? Like, how should my head think about these step ups in market cap? Are they like efficient? Is there like a street model that I would use? Okay, that makes more sense because their growth rates are higher, et cetera, or not?
No, no, it's a fantastic question, right? It's not as efficient as it should be, but it's a general good guide. Like it's quite rare to see, as you put it, I think FPOS enter into the top 5, for example, or the top 10. That becomes quite challenging. But there are a lot of games played,
Yep.
right? And like a lot of the games are with the float. Not just like these are all the same games that people played with equities, bucket shops in the 90s and stuff like that. But you will see a lot of tokens that have a really short float, and are able to go up a lot. And the team or whatever the foundation owns a large part of the supply of the token. And those types of things and those types of games that are played are where we need real research analysts looking at these tokens and being able to call that stuff out. And that's where, frankly, the opportunity is. Because if you're able to identify that, I'll never forget your call on, I think it was Lynn Energy, saved my family a lot of money. That was a call on, that you guys made a call that there was downside there, and I think you can kind of find the same types of calls in crypto, especially if you're able to understand like a few dynamics. One, what is the inflation rate of the coin versus the revenue it's generating? Two, how tightly held is the supply, and what do they intend to do with that? There's all these kind of things. The challenge historically has been, the amount of disclosure required is not the same as equities, right?
Right.
And so that, some information is really easy to find. Like, for example, how each chain and each app is doing on a per second basis. You don't need channel checks like you do in retail and stuff like that. Like you actually see all that data live, which is really exciting. But the data that you can't see is, I think, where the regulators need to come in, because then it makes hard to analyze these things. Like, how much does the XRP Foundation own, or how much does Ripple Labs own, or how much does all these kind of questions are important to note and to know, because otherwise you can't really measure the flows accurately.
Yeah, that we're good at. Like, if you want, I know enough about L1 and layers and what the difference between Avalanche and Solana could be.
Yeah.
I know enough to just stop talking right now. Like, that's what I know. Nothing. Zero negative. I would add negative value. But if you give me a time, a price, the flow of the entire fractal pattern, I know exactly what I'm looking at. Right? Yeah. I could tell you when insiders are trading ahead of a pump announcement, from on Friday. I could tell you whatever the signal is going to pick up, before you know that it's news. That's different than, like, what you essentially said is that the answer is probably going to be rate of change analysis, market cap relative to market opportunity or revenue growth, whatever your metric is that you're measuring. Is that, so you're saying that that's not currently, what is the difference between Avalanche and you don't have to talk about Avalanche's price to talk about the difference between Ethereum and Avalanche. What's the difference? Now you can talk about L1 and layers more than I can.
Yeah, I mean, one, right, like Ethereum is they're the first mover, right? Like they created the first public blockchain that anybody could write smart contracts on. All the initial liquidity in terms of stable coins, and just total value sitting on that chain is just much larger than a lot of the other blockchains out there because they have like a 5 to 6 year head start, and they built a lot of brand equity in doing that. Avalanche, came on the scene, like I said, in basically 2021, and it came to market with a much faster consensus mechanism, just meaning that you can click buttons and trade much faster. And it also provides, and one of the bigger differentiators is that allows other enterprises and builders to launch their own L1 blockchains. Right, so like I mentioned, Stripe is launching their own chain, Circle's launching their own chain. Our thesis is that many corporates and many different enterprises will eventually launch their own blockchains, not dissimilar to the trend with the cloud and how that servers moved onto the cloud and people weren't operating basically their own data centers in-house. They were leveraging the cloud. They will also leverage their own blockchains in the future. One, to move data, two, to move value, and three, to have a much more transparent, basically back-end infrastructure. And in terms of Avalanche, it's differentiated from that perspective. And to really answer your question, it's just newer. It's younger than Ethereum. It doesn't have the same amount of liquidity on it. It doesn't have the same brand identity that something like Ethereum does. But what it does have is it does have like a team and a SaaS product that allows enterprises, institutions to work with them to actually launch. So it's taking a much longer term view into, hey, if crypto is going to get institutionally adopted, Avalanche is probably going to benefit in a big way from that. More than maybe Ethereum would, or maybe more than Solana would. Right? Solana has really focused on retail trading, and a lot of the crypto native things like meme coins and things like that, and it captured a lot of the value from that and a lot of the flow from that. That has provided it a ton of on-chain revenue. But like you would always look at an equity company and something like that, or a stock, and you would look at how likely are those revenues to recur? What is the rate of change of those revenues? I think building rate of change models on-chain revenues, you can make a ton of money in the space if that's something that you really lean into, because the data, like I said, is available every second. The market is not efficient for the most part. So there's pockets of opportunity in understanding where rate of change for actual on-chain revenue for apps or blockchains is going. And like I said, those dislocations are probably really large because the sophistication is not there in terms of research, the research community for blockchains and tokens.
Yeah, start date clearly matters to market cap too. I mean, you got Bitcoin,
totally.
Bitcoin 2009, Ethereum 2015, Solana 2015. You guys 2020, did you say, or 2019?
2021, really, yeah.
2021? Yeah, I mean, so the spacing and the cap is like very consistent, right? I mean, when I said efficiency, I don't mean by some dumbass CAPM model. I mean like by the market's got it right.
Yeah.
I generally believe, as you know, that the market is right. and
Yeah.
it's my job to figure out, when I need to be right and why it's right. So in that regard, I guess while we could have so you got that, those, I think most people know what all those are, and they
Yeah.
have a lot of market cap. You have the flaming POS goes away. How fast is the pipeline of new coming up behind you? Like if I had 10 billion in market cap, I don't have public market cap that you could look up, but I mean, if I had a Hedgeye competitor that I actually considered legit, I'd know who it is. And
Yeah.
do you see a lot of that or not?
Oh yeah. Oh yeah. I mean, as you can see, like the prize is pretty big, right? Like, I mean,
Yeah.
being able to be one of the top blockchains out there, like, you're talking about 100 billion for the top 5 blockchains out there. That's the market
It's
cap
a
of
big
Stripe.
prize.
Yeah, that's the market cap of Stripe, right? And so, the opportunity set is huge. Like, for example, there's a new chain launching called Monad. Sui and Aptos were new chains that launched like out of like, Facebook. They were there before. It was out of that Libra project. So, you constantly see new chains launch, but the rate of growth of that has slowed down as the sort of landscape has matured, right? Like,
Yeah.
my view is that there is going to be 3 to 5 blockchains that anybody really cares about in the future, and like, let's call that in the next 2 to 3 years. And those chains will really duke it out, not dissimilar to how that landscape looks with the cloud, not dissimilar to how it looks with different OSs, operating systems like Windows, Apple, etc. I think you'll really start to see only a few of them. Now, the interesting thing about blockchains versus those technologies is blockchains move value, and blockchains need to have really robust capital markets. And capital markets is really a network type business. Like, the more liquidity you get, the more, it begets more liquidity, right? So all these DeFi ecosystems across these different chains really need to have really deep liquidity. They need to have really fast trading. They need to have the best assets listed there. They need to have the tokenization of different equities so people can trade them. They need to have the ability for credit creation across the lending platforms in the space. Like, DeFi is really capital markets in a transparent way, and I think a lot of traditional finance will migrate to DeFi in the future. And so, really, the opportunity set is large. The rate of growth of new chains, I think, is slowing because the incumbents are well capitalized, have already, yeah, there really isn't a ton of different technical, let's call it new tricks that they can pull that the incumbents haven't already tried. And so there's just not a lot of space for new incumbents. Like, it's not different, like I said, than the cloud or telecom or something like
Yeah.
that. Once the players are established, they're kind of now it's up to them to compete with each other. And for Avalanche, we view ourselves as at the table in that fight, and really excited to kind of show that we belong in that same range, top 5 range. Like, that's the focus for sure.
Yeah, I mean, you're definitely moving up the billboards on the market cap list into that range. The like when you take the, let's just say we have 3, 5, 10 different winners.
Mhm.
Do you envision, and is this even possible, the same way that it happened with Facebook, buys Instagram, and Google's got YouTube? Like, is that what's going to happen? Anyone who has a shot at cracking the top 10 is just going to get bought by one of the top 5?
We have been talking about this. This is a very topical question in the industry over the past like 3 months. M&A has finally started to happen.
Has it ever happened? Because again, I'm a neophyte. I don't know.
No, it's a great question. It hasn't happened with tokens really, but what has happened is like a bunch of startups in crypto who haven't launched tokens, or even some that have been acquired by legacy incumbents. Like, Stripe made 2 acquisitions in the space. Circle made an acquisition in the space. I think the next thing you'll
because
see
they
is
have currency, right? Because they have equity value.
they have equity value, right? So they could use stock for token acquisitions and things like that. But I think you will see consolidation amongst the blockchains and amongst the apps in general, because token for token swap is actually a pretty practical M&A mechanism, right? Like, I can go to somebody and say, hey, look, like, we want to acquire you, and we'll do some ratio between your token and our token, have your token holders redeem for ours. It's totally feasible to do on chain. It's pretty easy to effectuate. And maybe we verticalize some part of our stack, or maybe they're better at something than we are, or have better distribution with certain customers or retail, et cetera. So, Ripple, for example, like you mentioned, and they have a very high market cap. They've done, I think, three acquisitions, one in the stablecoin payment space, one in the custody space, and then they also bought Hidden Road, which is a pretty large, I think, trading venue for $1.2 billion dollars. And so acquisition, I don't know what you want to call it, fake it till you make it. But when you have currency, when you have balance sheet, you can use that and do acquisitions and potentially compete that way. So I think M&A is going to be one of the biggest tools that blockchains use, or different ecosystems use to kind of compete. It's just been an underutilized mechanism so far.
Yeah, I mean, Ripple's XRP, right?
Yeah.
Yeah, that goes all the way back to almost Bitcoin, like early 2010.
2015, I think they launched.
Oh, well, 2015 launch. They but that's 150 billion in market cap. Like that's
Huge.
above Solana, right? So that's it's interesting. I mean, if I was in that world, that's what I would be doing. I mean, you want to pick up the pace before everybody else does, and if that's
Exactly.
allowed, then I guess we would expect to see some of that. Just to wind up here, like when you think of like what would be kind of like the non-quad 4 learnings, let's just say that, or actually maybe post-quad 4, like for people that don't know, when the rates of change of the economy slows, both growth and inflation and corporate profits all at the same time, it's very typical that everything Bitcoin to crypto, we separate the two things, looks like a commodity. It goes straight down. Like, what would you say to that? Like, instead of giving me a Michael Saylor answer, which is, Keith, you just got to believe in something, man. Like, I know you believe in Avalanche. You know I believe in Hedgeye, right?
Yep.
Like, I think we both believe in God, and it's not Michael Saylor, right? Hope.com, good luck. But what would you say to that? Like, quad 4 dynamics, because they've never gone away from the NASDAQ, for example. It's hard to get rid of, but it's where you find the biggest drawdowns in these asset prices.
Yeah, what I would say is like, in my experience in following Hedgeye, like very few risk assets survive quad 4s.
Right.
Yeah, and so
It's
like
okay, really. I mean,
it's just what it is, right? Like I mean, like oil stocks not going to do well. A lot of things are not going to do well. High tech companies are not going to do well. Quad 4 really, the way I view it is it's kind of a market cleansing mechanism to kind of see where the leverage is, to kind of see where the inefficient operators are, and it usually kills them or severely hurts them. And it allows the better companies and the better capitalized companies to take advantage of quad 4 moments. So it's like asking me, if it's gonna rain or be a hurricane outside today, what should you do about it? For me, it's like, well, yeah, it's going to be a hurricane. Like, let me go prepare for that. Let me dress the right way. Let me do all this kind of stuff. But maybe if the hurricane does something bad to somebody else, I can take advantage of that. And so it's for us being proactively prepared to withstand and weather quad 4 drawdowns and be able to use the fact that we prepared to our advantage. And my guess is like, and I've told this to a lot of people internally, our following of Hedgeye is, I think, a unique asset to us because we can prepare for these moments. And as you can imagine, blockchains involved a ton of treasury management. You have a lot of tokens on balance sheet and stuff like that. So being prepared in advance for a quad 4 allows you on the other side to really, maybe consolidate parts of the market and then, do better in that subsequent quad 2 or quad 1. Hopefully that that emerges afterwards.
we could go on and on about that, and maybe we will at some point. We've run out of time, but really, that's the most constructive answer I've heard. I mean, really, if I know, like, owning Bahamian real estate, I get exactly what you're talking about. We're not going to ignore hurricane season. Yes, we would prefer that our roof doesn't get ripped off, but we have to have a plan for that. The patio furniture may get blown around a little bit. There are some things like minor tweaks but let's just go back to the prior example. If you're going to enter an M&A period, well, why wouldn't you wait for the hurricane to hit before you buy that house that just got leveled? I mean,
exactly.
You know it's coming. I mean, why would you pay market price before that happens? So there's a lot to be done with Quad 4 instead of hating on it. Again, I appreciate that answer. Thanks for putting that in Hedgeye speak and a lot of different things here. This was a lot of fun.
No, a lot of fun, and thank you so much, Keith. It's a like I said, it's a nascent industry, early industry, but I think it's ripe with a lot of opportunity, and I'm glad you guys are covering it. You guys are pros, so appreciate the opportunity to be here.
Thanks, Luigi. Appreciate it. Up next, Mike T.